Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. The most recent move higher originated from the drop made in the changeover gap at the end of January. It started from where the combination of the optimized February 2021 to date uptrend, currently at 652.5, and the rising long moving average crossed over, currently at 668.75. Prices utilized these two supports as a base for a move higher, slowly filling in the gap and leaving a smaller one behind in between 710 to 718. The next event was the combined bearish dark cloud cover pattern and bearish double made in the middle of March. On its own it was not that significant, but it did allow the creation of an upper trend line currently at 880.5 for a smaller ascending narrowing wedge pattern, which is still live. The lower trend line for this pattern was created just after, currently at 826.75. The upper trend is a multiple pointer, whilst the lower trend line is only a 2-pointer. Right now we are yet again testing the upper trend line for this very pattern. Now, this smaller ascending narrowing wedge pattern may well be the new kid on the block, as there are some longer term pattern ones I have spoken about right at the start of this year that you should also consider. For these I will refer once again to my annual review on Paris rapeseed made at the very start of January this year. In this I refer to a hesitation that the market made, and I quote, between October and December last year on the longer term chart. This doesn't show so well, but it is there. Thus this has led to yet another target topside. Target X2 is in the 834.5 area. I know this is a big ask, but I can only put down what I see, and that's the end of the quote. This target X2 was achieved 3 weeks ago. It seems such an ask as seen back in January, where we were in the 750-760 area, has ended up not being such a big ask as it first seemed. This brings me some further comments made in my annual review, and I quote, "This leads to my final point. Since May last year we have formed a newer, much more acute bull channel." That's currently 652.5 to 844.75 at the moment. To me it is super acute and thus unsustainable, but it is there and I will not dismiss it just because of acuteness, end of quote. Well, what I initially saw as a super acute bull channel is still there, and I have transferred and finessed it on this daily chart, such that I am more inclined to refer to it as the February/April 2021 to date larger ascending broadening wedge pattern, rather than a bull channel. This pattern is in the outlying corralling bullish influence in this market and has shown the way higher. However, 3 weeks ago we had another market move higher, that the upper trend line was broken, and this week may well be the first full week that we'll see trading above and outside of this trend line. Additionally, what is more important is that this is a monthly pattern. We will have to wait until the close of this month, that is tomorrow, to see if it is a definitive break higher. We'd also need to see what happens at the end of May for a consecutive confirmation. However, this break higher from the larger, longer term ascending broadening wedge pattern is happening right now. The only thing in its way is the October 2021 to date upper trend line, currently at 880.5. This is close by, so watch this for consecutive daily closes over, as well as the smaller and larger wedge patterns. Once we have confirmation over these, then I can start looking at possible targets for these patterns topside. Winnipeg canola. Last week the market overcame a significant resistance, the projected 50% Fibonacci line at 1142.90 of the big action back at the end of February and into early March that had stalled the market throughout most of the first part of April. This week the market seemingly overcome an even bigger pair of resistances. They are the 100% projected Fibonacci line for the same move 1193.10 and the middle tine, currently 1196.5, of what is becoming the super important mid-January to late February bullish Andrews pitchfork. The reason the pitchfork is becoming so important is that though it was breached on the upside back in early March, it has since managed to recover its integrity and show clearly the very recent bullish angle of attack. Thus we can say that the bullish incentive is alive and well, and the market now needs to keep an eye on the three tines going forward. The middle tine's already mentioned, the lower tine below, currently 1145.10, and what may soon become significant, the upper tine above. That's currently at 1247.90. My only concern is that this bullish pitchfork is quite acute, and I thus have concerns about its sustainability. But until the lower or even perhaps the upper tine gets challenged, then this will be the way ahead for now. Bursa Malaysia crude palm oil. The September to December 2021 bullish Andrews pitchfork had until the end of February been the most recent driver in moving the market higher. Then over late February and early March, prices broke up through the upper tine, currently at 78.24. Despite some apparent consolidation at the 50% projected Fibonacci line at 74.92, what we really saw was the market stalling ahead of the 100% projected Fibonacci line at 81.96, before dipping back down into the depths of the same broken pitchfork. Now, despite a couple of gaps on the way down, the fall was limited by a combination of significant late February highs between 67.81 and 67.90, and more importantly, the lower tine, currently at 62.45, of this previously mentioned broken Andrews pitchfork, bullish Andrews pitchfork. All this generated a more sedate, fresh move higher, in between the lower tine and the middle tine, which is currently at 70.35. So what has the market achieved in all this action? Well, the immediate consequences have been twofold. Firstly, we had a double top with late February to date action. The initial target was achieved, but the secondary target was just a little too far. The next thing to observe is that the gaps in the market on the way down are roughly bisected by the rising tines of the broken September to December 2021 bullish Andrews pitchfork. This is the pitchfork that had been showing the bullish angle of attack of the market until very late February, and is seemingly doing so again this time. Now, this all may be coincidence, but I'm inclined to think so, and not so. And these gaps may be an echo of the previous times. That is why I have kept this broken pitchfork on the daily chart, and have suggested, and will continue to suggest, that a special watch be made on these tines. That being said, we have already filled in both gaps and have breached again the projected 50% Fibonacci line at 74.92. Yet another level to watch. Overall, please remember this: we seemingly still have the bullish broken Andrews pitchfork still controlling this market, and unless this is broken and properly broken on the downside, then this pitchfork will still show the bullish incentive that is endemic in this market. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.